In this example, we are looking at the issuance of stock under several different situations. We have a company that is authorized to issue 50,000 shares of common stock. That just means that's a total number of shares that they can issue or sell, but it doesn't mean that's how many they have issued or sold. But then on August 1st, the company issued 2,500 shares at $25 per share. So they sold each share for $25. So we're going to prepare journal entries to record the issuance of stock under each of the following alternatives. So in the first example, it says the stock has a par value of $25. So if we issued 2,500 shares of stock at $25 per share, that's the amount of cash that we're going to receive. So we're going to receive cash when we sell the shares of stock, and we're going to receive 2,500 shares times $25, which is $62,500. Then our credit when we sell common stock is going to be to common stock. Now, when we calculate the dollar amount that goes into our common stock account, which is our legal capital amount, it always has to be based on the par value. So in this scenario, we sold 2,500 shares and the par value was $25. So we will credit the account for $62,500. It just so happened that in this example, we sold it for the par value. So the amount sold equaled the actual par value. Now in the second example, we're going to issue 2,500 shares and our par value is only $10 per share, but we're still going to sell it at $25 per share. So we always receive cash based on the dollar amount that we sold it for. So 2,500 shares times $25 is $62,500. And then when we share, we increase our common stock, which is done with a credit. However, the amount that goes into our common stock account is always based on par value. So in this example, it's going to be 2,500 times a par value of $10, which is $25,000. So anytime we sell our stock for more than the par value, we're going to have some additional funds that are raised. And those amounts that are raised goes into an account called additional paid in capital. And the amount that goes into additional paid in capital is the difference between what we sold it for and the par value. So you can simply take the $62,500 minus the $2,500 and that gives us $37,500. Or you can see that, well, we sold it at $15 above par, and we could take $15 times our $2,500. Either way, you would still end up with $37,500, keeping in mind that our debits still must equal our credits. Now, in example 3, we don't have a par value. So anytime there is no par value, then the dollar amount we sold it for is the exact amount that needs to be recorded in our legal capital account common stock. So we received cash, so we increase our cash account, and we received 2,500 shares times $25, which is $62,500. And since there is no par value, that's the same amount that must go into our common stock account, 2,500 shares times $25. Then in example 4, the stock has a stated value of $1. Now, stated value is very similar to par value. In fact, the only difference is when that amount is determined. The par value is always determined and is recorded in the articles of incorporation for a company, where the stated value is determined later on by the board of directors. So in this example, we issued stock, and we issued it, or we sold it for $25 a share. So we have our 2,500 shares times $25 is $62,500. But then the amount that goes to common stock will only be for the stated value amount. If there's no par value, but the board of directors gives a stated value, it's that stated value that must be used to calculate our legal capital amount. So common stock will be credited for $2,500 because we sold 2,500 shares times a stated value of $1. So anytime the amount of money we receive or the dollar amount we sell each share for is greater than our par value or our stated value, we have additional funds that must be recorded in our additional paid-in capital account. So in this situation, we actually received $24 more per share. 25 minus 1 times $2,500 is $60,000. So now our debits equal my credits. I have the correct amount received in cash and the correct amount recorded into my legal capital account common stock.